Alright guys, it's your boy JB, and once again we are analyzing gold. Last week I did an analysis which did not turn out to happen as I expected it to happen, but yeah, that's forex. It's a game of speculation. Sometimes our speculations do not go as we expect them to go. And so last week what happened is that, my bad, there was something I forgot to spot about what was going to turn out here in this area. Let me first mark it with alright, so here's the area. This is where we got to the other time last week. So when price wicked this low, I was expecting there to be a retracement, of course, which happened. Then after that retracement, what we were expecting is that price would actually close below this low and then this low, price closing down here, then to confirm our daily high. But it didn't happen that way. After the retracement, a bounce down was triggered, but what happened was that price returned back and took off that reaction point, and we knew that from there. I knew that my analysis was invalidated, that gold price was going to continue all the way to take out the daily high. Okay, so then another reason is that in order to confirm the daily high, it's still the same zone represented in the daily chart. So here was the high, and here was the low of that daily candle. And so to confirm that high, the next daily candle, which is being this, needed to close below the previous day low. And so this blue candle was supposed to close below this previous day candle to confirm the high point. Now it didn't happen. Rather, it went up. The next candle also couldn't close below the black candle and went up. And from there I realized that no, gold was not going to come down anytime soon. So now in this week, what happened here is this candle and this candle seem to have equal highs. Now when we check the OHLC means open, high, low and close. Okay, now for this blue candle,
Let us check the high of the candle. It's 2790.03. Okay, that's the high of that candle. Now let's move to the next one, that is the black candle. The high is 2790.07. Now it's a very slight difference, but they are different. Okay, their highs are not equal. One is 2790.03 and the other is 2790.07. That means the high of this black candle is the highest point
uh, between the two. Okay, so to confirm that this high is now become a confirmed high, sorry, my bad. To confirm this high, the next candles must close below the low of the candle with the highest high. And so we have this candle. What happened last Friday was that price was rejected to the upside. I was expecting it to close below the low of this candle. It didn't happen until it returned down very close to it. Okay, so from next Monday, this is what I'm expecting. The subsequent candles, we should have at least one of the subsequent candles in next week to close below this low, to wake this low. When that happens, the high of this candle will be confirmed and price must complete a certain amount of Fibonacci retracement before we can see any reaction to the upside. And so I'm expecting the next candles to close, to wake this low, and then the high of this candle will be confirmed. Okay. Then also in the 1 hour time frame or 4 hour, let me go to 1 hour first. Okay, so the 1 hour candle, we saw a very aggressive move of price to the downside, creating some imbalances here. So we expect that imbalance to be filled. We expect that imbalance to be balanced. So that gives us even more reason why price will return to the point of impulse to the downside. So God willing, next week we may see some price action to the upside, but of course the low here must be taken, and when that happens, price may begin engineering up to take its money. Smart money will go back to take in back its money and then balance things out. So let me go to the 4 hour chart. Okay, so next week, this is how uh, I'm going to trade gold. This whole zone is an important zone of support, a zone of demand. This whole zone is an important zone of demand where price may is expected to get to, but I don't expect price to get to there immediately from now. Price may go a bit down and then return to take its money, clear out every imbalance before we would see price actually returning to that important zone of demand. So this is what can play out with gold. This is what could play out with gold. And so next week, here's how we are going to take our confirmation. I know this zone is marked as an important point. However, this zone is also an important first zone of demand. From here, here up to here, it's a very important zone of demand. We expect price to play around this area and then go up. Now to confirm this, a 4-hour candle needs to close above this green line, that is our 9 moving average, and from there, if you get any good retracement, you can buy from there. Also, you can watch the engineering of price in the 15-minute candle, in the 15 minutes chart. Okay, so if you see any movement that looks like this to the upside and then down and then taking the high to indicate a switch, change of character, you get a good retracement, you buy from there, and gold is returning back to collect its money. At this point, important point of demand, of supply. this is very likely to play out. We'll see how things go with gold. Besides, a very important doji has formed in the weekly chart to indicate that buying pressures are beginning to reduce. Sellers have put the buyers at bay. And so, if the next week's candle close below the low of the previous week's candle, that would be an important indication that bulls have exhausted, and we would see retracement to, a significant Fibonacci level before maybe price may continue up. But trust me, we are getting close to the end of the year, and every investor that puts their investment bought into gold somewhere from the beginning of this year, from the ending of last year to the beginning of this year. Okay, so we have December. From this region, people who have taken buys from this region, now that it's getting close to the end of the year, would be looking to take out their positions and close their positions. And so from here we might see a lot of correction. Possibly from next year, gold will be selling massively. Large positions will be closed, and gold might return to this zone or way down to where the buying began at the beginning of this year. Alright, so that's it. Thank you.